Hello, it's Robert Miner with Dynamic Traders Group with this week's DT 5-minute update and trade strategies, which usually ends up being 7 or 8 or 9 minutes. Very exciting week this past week, very profitable week as well. I'm going to talk about a few markets. I have some trade setups for next week. Hope you take advantage of them. Why don't you follow me on Twitter and YouTube? And if you want some more fantastic education, check out my book, High Probability Trading Strategies, and think about subscribing to one of our DT reports. Check it out at dynamictraders.com. If there's ever a time you're going to want some good analysis, some good trade strategies, and some good education, well, these next few weeks are going to be it, because they are going to be some shockers coming up, more so than we just saw in the last couple of weeks. Okay, let's get started with looking at a few markets that we got some good probable trade setups for next week. This is the ES Daily Data, and in Thursday's update for our subscribers, I said, get ready. I think the stock indexes are about to roll over and die. Well, here's Friday's. They haven't died yet, but they certainly rolled over. They made an 8 daily momentum bear reversal. They closed below the March 3rd close. That was the signal that they're probably going to continue in their bear trend, and that a wave 2 or B corrective high is complete. And that's exactly what happened. The confirmation of the continuation of the bear trend will be a close below the February 28th close of 29.51, and the targets are quite a ways below the current market position. So just because you didn't pick the top, don't hesitate to get in this market on the short side if you have any opportunity to do so on Monday, because the capital exposure is well defined to close close above Wednesday's high. Now, I realize that looks like a long ways away. Just take a smaller position. Use ETFs. Use unleveraged bearish stock index ETFs or leveraged bearish stock index ETFs. The point is, get in the trade, put your stop in, and take advantage of the potential for a fairly significant decline next week, just as we took advantage of this decline as well. So, that's it with the stock indexes. It's not looking good. It looks like they're about to begin another leg down. Well, this is it's notes, and it's monthly data going back several years, back to 2012. And I want you to get some perspective here on what to anticipate. All I can tell you is this week or next week are the maximum time targets to complete a weekly high, and that's probably going to coincide with a monthly high. Really significant. So here's bonds in this past month. This is monthly data, so the month's not finished yet. No, it's only begun for that matter. It's March, but we're approaching what should be the maximum on the upside around 138.26 to 139.20. Really significant. The end of a 5-wave advance from the 2018 low. Really significant. So if you have long-term interest rate needs, borrowing needs, what does that mean? It means you want to think about locking those in right now. Is this a time to be buying bonds? It's probably the worst time in the last 50 years, or maybe in history, to be buying bonds and holding them long term if we're about to make a monthly high, which may be really significant. Now, I'm not saying we're going to turn around in the next couple of days. I suspect we're going to make the high next week. If it's not complete this past week, they may meander kind of sideways until the next FOMC meeting in about 10 days. I think that's March 18th, a week from this coming Wednesday. But after a week from this coming Wednesday, more than likely, bonds and notes are going to turn around and begin a fairly substantial and longer-term sideways to down net bear trend. So just be prepared for that. This is the Euro Weekly. And this has been a major signal this past week in the euro, a major bullish signal, not just on this weekly chart. This is the weekly chart here, but it's probably a multi-month low. We probably are going to have a bull trend in the euro, bear trend in the dollar over the next several months. Eventually, it will probably come to test or exceed the February 2018 high. That's really significant. But we're just in those initial stages. Weekly momentums are just turned bullish. The immediate trend should be net bullish for at least another 2 to 3 weeks. However, we have reached the extreme for the end of this wave 5 on the upside. And it continued longer and further than I anticipated, but trading is like participating in Tai Chi. I don't know if you've taken any martial arts and all. There's the hard martial arts, there's the soft martial arts. Tai Chi is one of the softer ones, and it's basically you use the opponent's energy against him, you get out of the way, and that sort of thing. It's like a Aikido, and that's what trading is like. Is you have your technical analysis that indicates if what the trend is, if we've reached an extreme of the trend or we're at the position of a reversal, and then we put our stops in, and the stops are like, that's where you get out of the way. You get out of the way and let the market run a little further if it's running. And that's what happened this past 2 days at this week. We continued up higher after this bear reversal on Wednesday, but now we're near the extreme of price, and we're past a couple of days the probable time target for a high. So like everything is in position to complete a high, but it's what we call a daily high, which should be followed by somewhere around 4 to 6 days of a corrective decline. When we make the reversal, we haven't made that reversal yet, but when we do, 4 to 6 days net bear trend, but that should be a corrective decline followed by the continuation of a bull trend. And potentially, eventually, that bull trend is going to continue for several months and quite a bit further on the upside, just like the dollar. The dollar's a sick puppy, really sick puppy here, and it's about to have a corrective rally, but it should resume the bear trend, and that should continue, not just for several weeks, but probably for several months. Well, that's it for today. Please, if you like what you learn here and you like these videos I do on YouTube and for Twitter, check out our DT reports. Really inexpensive to get daily updates, 2 videos a week that are about 20 minutes each, and plus a video trade tutorial, an educational video on top of all that. Check it out. I hope you become a part of the DT community. Take care. Have a fantastic week.